All right, let's jump into things. Where are we at? 10 o'clock, 10:01 to be precise, on 15th of April. Geez, these months are flying along, aren't they? So you put your head down, a couple of sort of weeks of sort of hectic tariff news coming out, and then you go, oh, what's going on? And we're halfway through the next month already. So things are, yeah, certainly ticking along here. But look, let's start off with gold. Um, got the pullback first little target sort of hit into overnight. So I mean, everybody knows, most likely knows where gold is at. We had this mammoth run up over along here. This is 10% or thereabouts from low to high through last week. We're sort of pulling back at the moment. You can see that obviously sort of like, in the scheme of this whole move and that, we haven't even come to the 23%. So this is still ultra bullish mode at this point. But even with sort of bullish moves in that, we can expect to see little bits of obviously periods of cooling because again, look, if you're sort of wanting to buy this thing up, and the people that have sort of been driving this thing, not only just through this part, but through this whole part here, they'll want to see some sort of cool and some pullback. Because if you can buy it and it gets a little, everybody's on board, and you're at 24, no, say 24, 32. I swear I have some level of dyslexia so there, but 24. Um, 3246 or whatever it got to for the highs there. A pullback, and if you could buy it at 32, if you could buy it at 3150, these kind of things, and that's obviously a lot more attractive because you get that extra $50 sort of move out of this thing, and obviously it brings your average down a little bit. But first things first, we moved up through the channel. This was very fast. It was like, as I said, 10% over 2 days or so. Those things are not sustainable. Like, if you look at linked levels of sort of growth as things are moving up, you want an exchange back and forth, buy sells, build liquidity, whichever, whatever. This was just straight up, 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 up. So, it's bound, these things can't hold these kind of angles forever. There is actually a tool. I can never seem to find it when I'm looking for these sort of things. It was 2 seconds. Might be this. Is it this one here? No, it's not the projection. There, 1 second. That's right. I don't know what the point of this sort of thing is. You can see an angle sort of visually on there, I suppose. But yeah, this sort of thing here, I guess you can say. So here, and then you can actually look at the angle in which this thing moved up, and it's on like a 70-degree or 71-degree gradient. So I'll do a little bit more work with this kind of thing as to sort of what these potential levels are more sustainable if we sort of move back through things and that, because it's certainly quite interesting to sort of say 71%. That's obviously not a super sustainable level that it can grow on. So anyway, look, back to where we're at. Let's get this out of the way for what it's worth. Okay, yeah, so we have seen a little bit of a cooling. We saw a little bit of a channel break, get onto the lower time frame, so we could see that move through here. You can see that it tried to push up here early in yesterday's trade. It just actually if you get super down into it, really, oops, call 1 second, and back, spam calls. It actually very, very, very much just took out the top of that and obviously rejected back down there. So we had gap down yesterday on the idea over the weekend that we were going to see an exemption of smartphones, chips, and computer products, and that with the whole sort of tariff thing. And then, as I say, I covered it yesterday, but like the weekend markets, which typically is sort of like 0.05%. We're looking to sort of equity markets 1 to 3%. Gold was down 1% at one stage. And then obviously, we saw these things open, bang, and they dropped down. But then there was a little bit of sort of confusion, like so much of this stuff at the moment. Like, it's, the headlines, half of them seem to be completely fabricated. And the other half sort of seem to be, uh, just fudged truth kind of thing. So, like, you can't really tell what's what's real. And, the market will react to it because, you got to take it at face value. And then you see the White House walk back stuff or say that stuff was just completely made up. Yeah, so it's a very, very tough time to be, excuse me, sort of trading with this kind of stuff at the moment. But we saw the initial stuff over the weekend, which caused a little bit of a sort of a shake, and probably what is still a little bit of this continued shake through here. Then there was a bit of a rebuttal from the Trump and also the White House to sort of say that it's not actually that they're exempt from tariffs. It's just that basically, in short, kicking the can down the road with them. They said they're going to fall into another basket of sort of tariffs. So excluded from the 125, 145, where it's a percentage tariffs, back to what they initially were, which was I think about a 20% tariff, and then that's going to be then reviewed. I think it's 60 to 90 days. So kick the can down the road. So the markets kind of thought, hold on, wait. So hold on, wait. They're not excluded. Oh, but they are, but in 90, 60, 90 days. Blah, 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 blah. Net result or net result from that kind of sort of thing is that there's some sort of progress. And remember, this is what's driving gold so incredibly at the moment. The fact that of this uncertainty, nobody knows what's happening, nobody knows where to park their money. They're thinking, like, you know what, if gold crashes, it's going to crash 10%, and it's super bullish at the moment. So, not even just at the moment, over the last year particularly. If you're going to put some money somewhere, keep it safe while everything's just flying all over the shop, well, gold's a great place to put it. And not only that, now we've seen gold go through the roof as well. So it turned out that it's not only safe, it's actually very profitable. So gold's not even crashing, gold's actually accelerating with this kind of stuff as well. So, people see that, they pile on, and more and more. So you get money from the equities, everybody's selling off the US dollar. Things are just all flowing into, other products, but gold particularly as well. And that's why we're seeing sort of pump up. So we're seeing a little bit of a cool off at the moment. That's fine. It hit this zone that we sort of marked out yesterday. So these are the three levels that I'm looking at, and I'm still looking at these because I don't think that this is necessarily enough and it's going to go back up. But what we can do is obviously drag this up here and say, bang, there's your little range at the top over here. So I did have another little one, this little breakout box here yesterday. And this was my sort of feeling with this. So broke through this rising trend. We came up, I actually sort of drew this out. I don't know if I drew it out during the video or not, or just afterwards, but through this area here, I said, look, said to myself at least anyway, a breakthrough and close outside this little box would see some direction for us. Obviously, it got right up to the wire here, but didn't fail to close outside. And this is why it's important sometimes with these things to really sort of wait for that confirmation, wait for that candle to close, because we didn't get the close. Second one tipped out the top. Obviously no close there, rejected down, and it's pretty much just boom, pull back through there. And we sort of pretty much a 50 buck pullback from the high to the low through the day. So down 1.5% or so. So, 50 bucks, there's a while ago, that would have been like, wow, it's a monster day. This is just like, oh, okay, yeah, it's a pullback, but it's relatively moderate. That's okay. So what we're seeing here, obviously, we had that little sort of support area, like on the other chart. This is where the buyers were sitting previously. We're coming back out, we broke up, and it's just trying to find some support, some resistance here as well. Should it break back up here, look, above 23, I think you could sort of go back on with this upper area here, and maybe that's it. We'll go back onto that other chart. Maybe that's it with it all. But I would say more likely you're going to see a little bit more of a sort of pullback, mainly because DXY is looking a little bit perky from down the bottom here as well. So there might be some opportunity in that, and we might see some flows, even if they are just temporarily, come back out of metals and then into US dollar before they start to sort of slam US dollar down again, and we see these flows come back in, and that'll be what drives this move here. But like as I always say, we've moved up, we've found some resistance, at least for now. 3 taps into this area here, we got rejected back down. Still not even at the 23%. So it's still very bullish in this particular one move. I mean, overall it is, but still in this particular move as well. Should it break underneath, 31.90, what did it get down to? 31.93. So 31.90s, I would say, you're probably looking at that touch up over here, which is 31.67-ish zone, which is those previous highs that it got to before just melting down a little bit. And I should expect a reaction here. If not, definitely down at 31.40. 31.40, I imagine, to get the bigger kind of reaction should it get down to there. So we can start to almost sort of build a little bit of a line of what the sellers are doing. You know, should they want to sort of push this thing back up. So, you know, right on what would be this sort of, you know, short-term sort of falling resistance. It's a little bit thinner so we can see what's happening with it all. Yeah, so should it sort of reject from here, we could look for a little bit of a maybe continuation of a little bit of a drift of a channel down this way down here, moving sort of, you know, through to what does this take through the rest of the session today, maybe come down towards that 34. I don't imagine any sort of just straight drop downs, but I could see this thing grinding down. And if you look on a smaller time frame, yes, so you could see that they were moving up, sell it down, move it up, sell it down. Not very different. I mean, look on the small time frame here, you could say yes, there's some back and forths, but very strong here. I mean, you can see the gradient coming up here, and this is obviously a bit more of a cruise. This one sort of coming through here. So I wouldn't be surprised if this does drift back down here, test these 90s level, we see a little bit of a test underneath, and then sort of move along towards that sort of, you know, 3160, 3160s kind of level, and then, you know, move this a little bit further along. Whoops. I don't do time sort of things, but more just sort of actual price levels, as you can see. You know, these levels marked through here. So that's what I'm kind of looking for. Look, should this thing just open up and rip, which, you know, at the moment is holding up here a little bit, you know, again, you know, above sort of maybe through 27, 27, you could expect it possibly to come back up and sort of test those highs again. And we could say that, okay, maybe that's it for the pullback and this is the range. If this thing goes out the top now, it's still, as I said, very, very bullish because, you know, these pullbacks, you got to think sort of the way that these fibs work are, okay, it's a two-pronged thing. So people taking profit, well, only enough people are taking profit to get it down to here, met with buyers that aren't, they're not like, okay, look, I'm going to wait down here for my entry. They're like, nah, let's buy it here, buy it here, buy it here, buy it here, buy it here. You only buy these things at this level here when you think it's going up to over here or above. So, yeah, we'll see how they go, but see how much they want to sort of try and drive these things down. Previously, with these kind of moves, we were seeing these things ultimately like super bullish moving up. If we go back, I think this was in, where is it, in October? Stupidly low time frame there. October, we saw those big sort of sell downs. Where's it looking at here? Here. This is in Feb, so that 4%. No, this is the part that I was thinking of. We saw that mammoth sell down here, and we saw the second push back up, and then slammed it down. Push back up, slammed it back down. So, yeah, this is when basically what I sort of think they're trying to sort of just clear the book a little bit. You know what I mean? Anybody that holds through this whole period, well, good on you. You're crazy. But these are big pullbacks through here, and then people getting short. And certainly, I got ripped out here, made good money here, got ripped out here, made good money here, and then I think I stayed clear of this thing, and then I just sort of got long through this period at the start of the year. But yeah, certainly, yeah, I think this could potentially. I mean, look, if we put this onto what's this 4 hour now, you know, should we see this thing flip down here, you know, a little close down around those 90s, I think it'd be enough to sort of get you down towards those 60s and possibly even 40s for a reaction. But I imagine because, as you can see, it took a couple of levels of testing here before you finally rejected down. I imagine you get quite a reaction from that 40s level. Should we sort of get back down there? All right, onto the other metal, silver, and this thing's still grinding along, and that it is again sort of finding a little bit of resistance up around this area. If we step back a bit, this is the rising support of the year. So which chart? I don't remember which chart we use each time. So this was the rising support that we saw sort of through the year. It's around that 61%. It's kind of danced up around the top of this level here. You want to see this thing continue up. It's typically, well, not typically, this is actually what you call a hanging man kind of candle. So look, a lot of these things at the moment seem to just be like it looks like something and then it just disregards that. So it's a bit hard to sort of fully commit to these things, but typically a hanging man is a top, excuse me, is a top candle. So your trigger under here is underneath 74 to see a little bit of a sort of pullback, cool down kind of thing. This thing's gone a lot higher than I thought it would. But you know, you can see why with this 61% and the underside of this resistance here, sorry, previous support now sort of testing for resistance, that could be a level which marker might go, yep, that's enough for us, and they start to sell it back down. If you have a look on a lower time frame, I noticed this before, we've almost got a bit of a three drive happening here as well. where we're actually sort of finding a bit of resistance. So if you sort of look at this here, you say, look, this is the level where your buys are. That's 1 drive, 2 drive, 3 drive, bang. So again, look, lining up, I said on the high time frame underneath this wick here, which is still pretty much your trigger. This is a level here, close underneath 31.80, and then you're probably looking back down, as I said, around 31 or so. Been a great trade for anyone that caught. I didn't, but anyone that did sort of catch that. So, right, here we go. 1, 2, 3, down. That's what I'm sort of looking for. So downside moves and that. And as I said, I think the sort of like, with, US dollar sort of taking out the lows, I think that could be due for a little bit of a bounce. And we could see a little bit of the money sort of flare out of these things because the recovery's been very good. You know what I mean? So to some people were sort of grabbing this thing from down the bottom. And that's 14.5% off the lows. Obviously, you're not buying the very bottom tick and you're not selling the very top, but the bulk of that anyway, if you got in through here, there's still 10%. And this is in a couple of sessions, so if you can make sort of 10% on these things, in 2-3 days, I mean, you got to expect some people to be taking some profit along the way there. Move along, we've got Aussie. Still keeps firing on. It did have a little bit of a shake through yesterday, which again is similar with the silver, I think gives us a trigger line, should it sort of come down here. So underneath 80 or 75 or whatever it got to there, I think that'll be your sort of like downside trigger line here. So, a bit of a shake, strong recovery, moving down again. This thing has just been really a bit of a beast of a recovery. And it's a very odd one because, why is the market gone, yep, Aussie's a great buy here, other than sort of like a squeeze of these things. After the election last year, I noticed that, well, not I noticed, Aussie did happen to have it outperformed all the other major currencies the day after. So everything sort of sold down on the election, then everything sort of bounced a bit. Aussie came up like 127% of its loss on the election day, which was really just a trap before it then got smashed. So it does make me a little bit wary of this recovery move, just given those kind of things. But I mean, as you can see, this has pretty much completely outdone that whole move. This is from the Friday here. So yeah, there's Friday. Boom, there's your sell down. Like, if you have a look, there's a 78%. So it's really, I mean, the recovery's just been insane. And this, ever since this candle kicked it off here, where we had the sort of the pause, 90-day pause, and it's just grinded up, 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 up. And, as you can see, it's not even sort of respecting this. It's actually grinding up on a higher kind of breakaway channel kind of thing. So if this lines up with anything here, gives you a little bit of a sort of breakaway channel there. But look, regardless of all these things, I don't think this thing's quite ready to go out the top. Certainly 64s, should you go above there, as I covered the other day with it, it's going to absolutely smash through the top. US dollar obviously was what was pushing it up. The one seems to be just kind of like flatlining a little bit. It's not really doing a great deal at the moment. And RBA, I'm actually not super up to date sort of with their latest sort of talks of it all. But from what I did see, Bullock was sort of pretty much sort of like, throwing water on the idea of having any sort of mega cuts or sort of multiple cuts and all this kind of drastic sort of stupid measures that people were suggesting. So obviously a more hawkish kind of thing and not sort of giving into all these cuts. Well, that's a stronger thing for the RBA. So it still stays pretty bullish for Aussie off the lows there. As I said, should you come down, that's the level that I'm looking underneath for a little bit of cooling to come down. We break higher. Well, that's where you're going there. Then you're looking up to test those highs up here at high 63s, which is insane. Seems we're down sub 60. We haven't been sub 60 since COVID. So multi-year lows, and now it's really right back up the top over here. So yeah, that's been an incredible kind of recovery for the Aussie there. But as I said, these things as they move up, I wouldn't be surprised. And if we can get a pullback down, 61, anywhere in the 61s, I would be happy to buy it to sort of get a bit of a sort of swing to come back down here and then move up like that. But at the moment, it just keeps grinding higher and higher and higher. So it seems more, I would say, that the reason I'm sort of thinking of buying Aussie so relentlessly is not so much that the Aussie's a great buy, just that US dollar is so weak. Everything against US dollar is just absolutely smashing higher. So, should they see a little bit of a push up on DXY and the market starts to go, hey, you know what? Let's actually sort of buy, let's take some profit or whatever it is, and let's so get some US dollar buying for whatever reason. That could obviously get this thing to sort of roll over and pull back a little bit. Speaking of DXY, this is what we're sort of looking at. So a little bit of a rounded bottom sort of coming into effect here. That's what we were looking at yesterday. A couple little negative divergences sort of coming through here. This one's a very more subtle kind of one, as you can see through these lows here to here. You can see that this is obviously also coming up, and this is what we sort of say with these. It's not a typical sort of, well, it's not a textbook negative divergence, but as you can see, coming down to these lows into this support area that we sort of marked out, it's obviously sort of found a little bit of a higher sort of bounce with the RSI, yet still coming down into that support. And this is how you can use negative divergence without it being a typical, without this actually coming down and making a full new low. You can see that basically, even though it was just flat, coming into that supporting area, RSI didn't sort of come down quite low enough, or not as low as it had previously, getting down into that zone, and you can see the resulting action. So it did see a little bit of a bounce. One of these areas that we do have marked out, look, as soon as it got touched into, it got sort of sold back into, a little bit of a gap up this morning. So look, I wouldn't be surprised if you could see maybe a little bit of a push up with DXY through here. I mean, look, it's ultimately being bashed, but let's have a little look, even if it was just this part that we're looking at here. There's your lows. So 23% and sellers came in. Should this thing move up again, 38 is obviously, an area pretty much in line with an area that we got marked out here. So 100.7 or 100.6, whatever, around the zone overall. Get above that, well, okay, we'll see what they do with it and that. But at the moment, I'm not really expecting great deal. Kind of more maybe that kind of thing. Oops. Yeah, something more to that sort of effect. Should this thing sort of move up a little bit more, but we are seeing a little bit of a bounce up around here as well. Obviously, if you think about it in a small sense, there's your buyers here. The buyers have moved up and sort of held this zone as it is just for now. We've got a small little gap up. We'll see what happens when a little bit of volume comes in, but yeah, we could probably expect this to squeeze up a little bit. As we can see, the RSI is obviously still, moving in that upward direction with a bit more pressure moving to the top side. Move along, we've got copper. Copper keeps firing on with this thing here. So this is the range that I bought this thing down here. Talking of sort of like buy the lows, and I bought it here, sold here. It's a cross I have to bear with my style of trading. But sort of I'm like, no, that's too risky. Jumped out. And of course, poof, and when we're looking at sort of like, 15% or so. So yeah, that would have been one of those, Anyway, whatever. I did buy it, I did execute it. So I gauge these things on three things. There's analysis, execution, and management. Analysis was spot on, bought the sort of like the high level compliments. Execution was great because I bought I can't remember, but around here it's 4-1 area. Management, and that I get maybe a 1. I made profit, at least I didn't lose on it. On such a sort of bullish bounce, but certainly did not maximize whatsoever. So look, it is still sort of kicking along. It's coming into some previous levels for some reason we had marked out over here previously. We take this all the way back, where we're looking, so let's go on to a higher time frame so we get a better look at things. This was the election period over here. This was obviously that previous high that we had before. This little range that we had, I'm just sort of recapping, bringing myself back up to speed with it a little bit there. We can see that measure move came up and very well with the highs over there. Look, it's bouncing back up. If we actually start to go back, so that was the big drop, 78% of that big drop. If we take it from capitulation, so it's a bit interesting as to where you sort of take this from in terms of retracement for copper, because everyone else really started selling down as copper did at this point here. But copper was actually a couple of days early, but for its own reasons, because it had that capitulation out the top there. So if you look at it in the sense of, okay, let's get rid of these ones. Oops. Let's kind of start to clean it up a little bit. So if we have a look at from the capitulation high to where we are now, 50% retracement. If we go from everybody else's sell down, we're back up past the 61. I think I'll go from the full move to sort of call this kind of thing. Realistically, again, you're just looking at these levels that we've seen before. This is an area that we've got marked out. You can see it was resistance through this area, resistance. This was obviously the highs back, sort of, this must have been around October or so. Yeah, September, October. It's an area in which we've seen the market value it and sellers try to hold it previously. It's no real sort of surprise that you're getting a little bit of a sort of sticking point here. I mean, it's that part of the session where we haven't really got the true volume in, so we'll see what they do with it all. It's a little bit overbought. This is on the 4 hour. Again, look, I wouldn't be surprised if we see a little bit of a pullback with things through here. Let's just update this a little bit and get rid of this one. Yes, look, a move up here, I wouldn't be surprised if this maybe comes into effect with it all. I haven't got really any play with copper at the moment. Maybe just a little bit dirty that I didn't hold this part here. I'm just cautious about these bounces. But I was cautious about the bounce here. I was cautious about the bounce here. It was correct here for 1 second. They sort of back down. But as you can see, as it sort of consolidated near the top end of that sort of range, it just exploded. That was the sort of trigger for the next leg. But again, I'm cautious to buy these things, particularly at this point here, because you got to think these things are still, although they had the double move down here, this whole sort of like, find support, find resistance, find support, break up here, took out the highs, bang, and on it goes. If you take this part in this move here, well, that's bullish, yes, and that was a great buy through here, whatever. But in the grand scheme of things, really, what you're actually looking at is found support, find resistance here. This leg here, whether it's either going to come like this, or whatever, I do believe this is still due. And this is why I'm a little bit reluctant to be buying these things at this point now, because I think sort of like the time to buy it was back here. If you're going to hold it, I just think that these things, I'm cautious as to the sort of legitimacy of these bounces. I don't think we're going to see full V-shaped recoveries on these things. I think we are going to see another drive down. And that's what I'm kind of looking for. And that's why a lot of my triggers are more sort of like downside moves. Underneath 80 on Aussie, underneath 31.75 or so on silver, underneath the 31.90 on gold. That's the kind of moves that I'm looking for. A little bit more of a retracement in these products assets. Cool. And finally with China. China came back. Look, we had the fake breakout. I cover this every day anyway and that, but look, it found support yesterday. This is where we did the video yesterday, something around this point over here. And it's found sort of support on these previous levels. So resistance that we sort of saw a little bit through here. It's been a bit of a common level that we've seen show up a few times. That sort of 728-ish kind of level is bounced back up, finding a little bit of resistance there. Should this thing continue and sort of grind up along here, I'm looking around 736 to see what happens there, because they let it through once, they've pulled it right back. Are they going to let that thing drift up here a little bit more? That's the question. And I think sort of if we see this move, if we see them buying US dollar against the yuan, I think that's going to be an early indicator of things of a bit of a shift of stuff. DXY is great, but it's so heavily impacted by euro. And obviously, Aussie's not part of that kind of thing. Aussie's not part of this either. But this, to me, sort of gives a bit more of an idea of what they might be doing over here. So, and also it impacts gold a little bit as well. So if we see this thing moving up, I expect a couple of those sort of downside moves probably to play out with Aussie, silver, and gold. That's kind of what I'm looking for. So let's just put a little alert on here. I'm going to say short-term bounce. It doesn't mean it's a real bounce and it's going higher or anything, but as you can see, off the lows, they found a little support here. In this little move, it'll be a higher high, grand scheme of things, it's still pulling back, but as you can see, it's in that mid-range at the moment because, you know, we've gone up, we've found support, resistance, we've found support, now it's moving up here. This is the leg where we're going to see, is this going to come up here? Is it going to give us a lower high? I don't think we're going to get a break higher than that, but that's the kind of leg that I think we're going to get. So I think there's some upside move in here. I don't think it's going to break out and go higher, but I think this could come up and retest this 36 area because I think the fact that it got let through this sort of like big resistance zone is quite significant. Although they sort of sold it straight back down into it, I want to see what happens when it hits this zone here again, this 36, because this has been a strong area where they've intervened a lot of times, and the market's really sort of been crushed from that level. So I think you've got to see what this is like under normal sort of, air quotations, normal circumstances. So I wouldn't be surprised if we see a little bit of upside in this one move here, or weaker one, but on this chart upside. All right, and cool. Let's have a look where we are. We got the news. I don't think we got a great deal coming out again today. Tuesday through here, so we got the minutes for Aussie. But again, look, you know, you hear most of this stuff through the press conference, but I would expect it to still remain fairly hawkish with its tone. That's coming out in just under an hour. Got sort of employment, so it looks like it's coming down in the UK for what it's worth. CPI in Canada. Fairly flat, small little reduction on the month on month. So nothing really sort of impacted of all this sort of tariffy sort of stuff yet. Bit of US data looking to be weak, but improving from what it was. So any sort of move up towards zero or into a positive for even, we'll sort of see a little bit of a firming up of the US dollar there as well. Now, I think as well, I covered this the other day, but the thing that I think we may see a little bit of DXY movement this week is because we've got the Euro ECB at the end of the week. They're looking to cut the central bank kind of pattern that we seem to have been seeing more recently is that, you know, when currencies cut, the price moves up, which is not what it's supposed to be doing, kind of thing, which makes you sort of think, or leads you to the sort of the fact that it's probably sort of buy the rumor, sell the news. So, you know, people will sell the currency, in this case the euro, sort of prior to it. Everyone has the cut, and then they just close those positions in that move. So if that sort of does sort of play out, we could see DXY, obviously, because it's so euro heavy, moving up sort of through the week. And then when we do get that cut, was that Friday, Thursday night, we could see a little bit of a reversal and the DXY sort of coming down there. So main sort of thing, I wouldn't be surprised if we see a little bit of US dollar and DXY buying, at least through the earlier part of the week. That's it from me.